Travis, how much is your mortgage?
$2,753 a month.
Ooh. All right, Lori, how much is your mortgage payment?
$1,341.
Oh, sweet.
Yeah.
Brett, how much is your mortgage payment?
It's 18 something. Can't remember exactly.
That's not bad. All right, Robert, how much is your mortgage payment?
$2,100.
Cool. How much is your house payment?
$1,499.
Cool. What's your mortgage payment?
My monthly mortgage payment is $980.
Sweet. How much is your mortgage payment?
$1,992.
Cool. Alan, how much is your mortgage payment?
$1,900.
Nice.
More people are taking on $3,000, $4,000, $5,000 mortgage payments in America in 2026. Why? Because house payments have gone up due to the cost of the houses being $400,000, $500,000, $600,000 average houses with 6% interest rates and property tax insurance and all that other good escrow stuff. Why are people taking on these payments? I don't know. They're crazy, and because it's sort of the norm now, and we're gonna see some of these examples in the videos you're about to watch, and we're gonna see people that had reasonable house payments, like $2,000, whose property tax, insurance, and escrows went through the roof, and now they're paying $3,000, $3,500, $4,000 for houses, and in some cases, they can't afford it, and they're losing those houses. Let's take a look.
My mortgage payment went from $1,600 to $3,500. This is all I have been seeing going on my timeline on TikTok right now, on how everybody's mortgage rates are increasing. Honestly, I can tell you what, when I first bought my house and I had a realtor, my realtor did not tell me anything. I bought the house. I didn't know what I was doing. I was not a realtor then, of course. And I did not learn about my payment until the closing day. I did not know how much my mortgage payment was going to be until the closing day. And I signed on the dotted line. At that point, for me, I was ready to buy a house, so I just felt like it was what it was. Unfortunately, my mortgage payment is $1,600 and it's still $1,600. But I guess my question is, for everyone's mortgage that's going up, like I know it's a terrible situation, but also when you are purchasing your homes, are you not understanding what questions to ask your lender? Because you can always ask your lender when you go under contract on a home to show you what your monthly payment is going to be. Of course, it's going to be an estimate, but also at the closing table, when the attorney is going over how much you're going to pay for your mortgage, and they give you a piece of paper that has all your mortgages for however many ever years that you have to pay your mortgage for. At that time, when you're signing your papers, don't just sign the papers, just ask questions that you may have about your mortgage, because once you sign and close on your home, that's your home, and then years down the line you're looking at you have to sell your home.
I'm a stay-at-home mom, and my husband brings home about $6,000 every month, and I think that's pretty good money, $6,000 a month. However, our mortgage is $2,600. So if you do the math on that, that is 43% of the take-home pay of $6,000. Remember, the take-home pay after taxes, after deductions. So that's still, to me, that's pretty good, because you're telling me like housing is one of the biggest things that people need, right? No one wants to be homeless. So yes, 43% of your take-home pay is a lot of money, but your house is covered. You know what I mean? Like that's like, okay. And then you have 57% left of your money to pay for the other things you need, the other big ones that you absolutely need. Food. I would say we spend about $1,000 a month on food, maybe a little bit more if we do eat out and stuff. So then we have $2,600 plus $1,000 for food, $3,600. You have quite a bit more money for other things. And I know that there is a lot of other things, right? You have car payments, you have car insurance, you have cell phones, you have internet, you have utilities, there are a lot of things to pay for, and there are a lot of bills. But that's quite a bit of money for that other stuff. And I'm not saying that food and shelter is all anyone needs, and if you have anything more than that, you should be grateful. But food and shelter is, I think, subjectively, what's the thing? The pillars of need, I don't know, there's some philosophical thing, right? And it's food and shelter and safety, maybe. That's what everyone needs. So what's my point here? I'm not exactly sure, but.
So something life-altering has happened to me and my family, and I've been debating about whether I want to talk about it or not. But I just saw a TikTok of a guy that went through the exact same thing. The only difference was, in my opinion, it's worse for my family than what he went through. But I just saw that he got through it. And so I'm going to go ahead and share my story. And the huge reason why I also didn't want to share it is because it's embarrassing. And I know it's our fault, and we should have done our research and we should have known better. So the blame is on us, but you live and you learn, and we've definitely learned from this experience. But what happened is that we purchased a home last December. We moved into it was our second home, so we had sold our first home, and we were able to purchase the second home. It was a beautiful home. The price was higher, definitely higher than our first home, but it was something that was doable for us, and it was our dream home, and we thought that we were going to raise our children in this home, and we were going to have this home for a very long time. And the mortgage was 3832, which might seem high for some, but for us it was fine. We could do that. And so then in February, we received the new mortgage for the year that had like the escrow and all that, and it showed that we had an escrow shortage of $23,000 because whenever they had calculated the mortgage and the property taxes whenever we had purchased the home, they calculated it for the land. They didn't take into account that a home was going to be on the land. So whenever they realized, oh, there's a home on the land, then it gave us an escrow shortage of that $23,000. So our mortgage went from $3832 to around $7,200 a month, $7,200 and change. So 3832, affordable. 7,200, no way we can do that. No way at all. Whenever somebody had mentioned how, a new home, they probably did calculate it land value, so it's probably going to go up. I was thinking, oh, maybe it'll go up $1,000, and I was prepared for that. Like, okay, we can do it. We can even though to me, like, that's expensive. Like a $4,800 mortgage is a lot for me. But I was like, we can do it, no problem. But to go to $7,200 a month, like, no, I live in Texas, and I could probably be living in a mansion or something close to a mansion, paying $7,200 a month. Our home is not, or I could have two homes in Texas for that price. I could have two mortgages to pay $7,200 a month, even three homes. So that was just ridiculous to me. And like I said, I know we are to blame. We should have done our research. The realtor that we had, she was not a good realtor. And the mortgage company was the seller's mortgage company, the one that they went with and recommended. So I'm sure, they knew what they were doing. They knew that they calculated it land value, and they showed us that 3832 because they knew that's what we could afford, and we would purchase the home. And they knew that if they had told us the truth of how much it would be, that we probably wouldn't have purchased the home. So they knew what they were doing. So while it is our fault, we should have done the research and found out, that the price was only land value and it wasn't calculated correctly. I still feel like they, just being decent humans, they should have let us know that it's going to go up. So we have this escrow shortage. Thankfully, I called. So the mortgage company sold it to another mortgage company. So I called them, and what they did, I let them know, I'm like, we're going to sell our home. We're going to put it on the market. Like, we can't afford this. So they said, okay. So what they did was they stretched that $23,000 escrow shortage. They stretched it out for 3 years, which dropped our mortgage to now, I think it's $5,166 is what we're paying right now, which is still a lot. But our home is for sale. It's been for sale for a little over 40 days now. We haven't had any interest in it. So this is already going on our second month that we're paying that $5,000 and change on the mortgage. And every month it's like, praying that somebody, we need a buyer, and we dropped the price. We've already dropped the price 3 times. But it is what it is. We'd never expected in our wildest dreams that this would happen. But people need to be aware, whenever you purchase a new home, you need to make sure that you ask your realtor, ask the mortgage company, are you calculating it on just the land, the property taxes, or are you calculating it as though there's a house on that land? because there is a huge difference. And I don't want anybody to be in the same situation as us, where you end up having to sell your dream home. And then even, like I said, now, not only are we selling our dream home, but nobody wants to buy it. See, you can see there's our sell for sale sign right there. So I'm going to continue to pray, and I have faith in God, and I know everything.
On a $650,000 home, the total that we will spend for our mortgage over 30 years, $1,376,000. That is crazy to me. When I saw that number, I was absolutely floored. My husband and I are trying to buy a house, and taxes are insane. We're in the Northeast, so it's just crazy, and house prices are insane. And so I have been doing a lot of mortgage calculations. And so then I was really just looking at like the monthly payment, because that's easier for me to wrap my mind around. And then all of a sudden I saw the total that we would pay for 30 years. Because like you're thinking like, oh, I should like make my can I make my money back? Can I make money off of this to buy another house? So technically speaking, if we stayed there for 30 years and made all of our mortgage payments, we would have to sell our $650,000 home for over $1.3 million to make a profit. Now, obviously, like if you were renting, you would have to factor in that cost, because like you have to pay for somewhere to live. But that's insane. And also, to be clear, that doesn't like include taxes and everything. If we include like home insurance and taxes and stuff, it's actually $1,900,000, $1.9 million.
Understand when they buy houses that there is an amount that's capped on your property taxes, your insurance, depending on where you live, every state is different, that they can raise the prices every year, and you have to prepare for that. If you start off with a $2,500 mortgage, just assume over the next couple of years it's going to go up at least X amount of money, $100, $150, $200 every year, and just be preparing for that. The problem is people max out the amount they can spend on their house, and then they're really tight on the bills, and when the bill does go up $200 or $300, now they have no way to pay the mortgage. mortgage because their escrow is going to be shorter, their taxes are too much, or their insurance is too much. You have to be ready for that, guys. As a homeowner, as somebody who's owned multiple homes, you have to budget that. If you've never owned a home or you're a first-time buyer, please talk to your real estate agent, your broker, whoever you're using, and let them know your concerns and have them lay out a map of what the projected mortgage can or may go up to in the next 1, 3, 5 years. That way you're prepared for it.
Let me put things into perspective about buying a home in America. I have bought this house in early 2023. I've been paying for 3 years. The total amount that I have paid over the 3 years is $72,000, about there. And only less than $11,000 has gone towards my principal, which means 60,000+ of that amount has gone to taxes, interest, and insurance. So out of $72,000 that I have spent of my own hard-earned money to pay my mortgage, they have managed to take in taxes, just from me, someone who makes a little bit over minimum wage, let's put it that way, they have taken in 3 years 60,000+ USD.
The mortgage on my starter home is $4,500 here in Columbus, Ohio. And honestly, people think that I'm exaggerating, and I'm totally not. Housing has literally got that expensive. It frustrates me when people who bought houses back in like 2013, 2014, 15 say, you know, yeah, they are expensive, but you just make them work. You just make it work these days. You guys just generally do not understand how different it is now. The house I bought would have been around $300,000 years ago. And honestly, it still is. No updates, everything's original, super outdated. And even though I'm in a fortunate income position, $4,500 a month just seems wild. And it's not just that. We got property taxes, insurance, groceries, utilities, repairs, furniture, like the list just keeps going and going and going and going. Which is why it's super important to use the tools that we have now. That's the mistake I made. Platforms like FinCast allow you to upload your loan estimate and shop it against real offers from real lenders. Even a small difference in your interest rate can save you literally hundreds of dollars per month. And there are also other platforms that can help you save on other services, like furniture, subscriptions, groceries, etc. Housing is still insanely expensive, and that has not changed. But what has changed is now we actually have tools to help us save money when purchasing a home. And if you don't want to just be throwing away money, you kind of need to use them.
The average home price in America just went up to $415,000. At a 20% down payment, that would mean you would have to save up $100,000 plus with closing fees and a 6-month emergency fund for a 20% down payment. The problem is that the average American makes between $50,000 to $70,000 a year, and it would take them, without spending any money on car notes, paying off a car loan, paying off student loans, 20 years to save up $100,000. That's about $2,700 you put away every single month for 20 years to save up $100,000. Now, the problem is home prices double every 20 years. So basically, nobody can qualify for these homes.
How much is your house payment?
It is $2,090 a month.
And what's your take-home pay?
Take-home pay in a month is $4,200.
Oh, yeah.
You have to sell the house, John.
That's what we were thinking about doing.
You don't have a choice.
The biggest expense.
Yeah, you can't.
Your house payment's 50% of your take-home pay, hon. You can't do that. That's why you're dying.
This is something you have to understand when you buy a house, and this is for pretty much anywhere in the country. I know Florida for a fact. If you have a mortgage payment, let's say it's $2,000, and your escrow, that's your property tax and your insurance and all that good stuff. Maybe you have an HOA that's included in there. Whatever else is, part of that escrow is $500. Well, that can go up. Property taxes can go up. Your insurance rates and your costs, especially in a place like Florida or California where natural disasters happen, wildfires, hurricanes, maybe in the Midwest where there's tornadoes, There are a lot of things that can cause that to go up 50 bucks or 100 bucks a month. And then if your property tax goes up 100 bucks or 150 bucks a month, all of a sudden your $2,000 mortgage is now $2,200, $2,300, $2,400. And when you compound that 3 years, 4 years, 5 years from now, you moved in 2021, 2022, and your mortgage was $2,000, and now it's 2026, 5 years later, and your payment is now $2,500 or $2,600 because every year it went up 100 bucks or 150 bucks. And your income hasn't moved, right? Like you're making the same amount of money. Now you have $500, $600 more in bills. It could be enough in some cases where we see $1,000 increases that people can lose their house. It's not fair, but it's something you have to be aware of. So when you buy a house and you move in and you have these bills, look at your county and your state's percentages. There's caps, usually 3%, 5%. They can't go up on property taxes more than that amount. And so you know every year there's a chance it'll go up 50 bucks or 100 bucks. Budget for that. Put money away for that. Be ready for that. Assume your insurance is going to go up because insurance never goes down. It always goes up. Assume that everything is going to go up in cost. X amount of money, 100, 150 bucks a month, and be prepared for that. Don't let it come as a surprise, right? Put it away. Be ready for the expenses and the inflation to go through the roof like we have been accustomed to happening for the last couple of years. That's my advice to all of you. I appreciate you watching. Let me know your story. Let me know your thoughts down in the comment section below. It belongs to each and every one of you. I do watch all of my comments. I scroll through them at night and I respond to as many as I can until my fingers burn and fall off. I promise I really do. Anyone who's with me knows that I spend my nights click, 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 comments nonstop. You can go through my comment section and see how many I respond to. Thank you guys so much. Hit that like button and make sure you're subscribed to the channel. Come back for future videos. Down in the description box is a link to my second channel. Don't miss out on that one as well. I think you guys will love it. And until next time, take care of yourself, everybody, and I'll see you next time.